Chris Conway joins us from the Australian Stock Report live out of our Melbourne studio. And Chris, of course, seeing that news from the Fed overnight in those minutes, somewhat surprising, certainly did have an effect on commodity prices, and that has seemed to play out on our market today.
Good afternoon, Ingrid. Look, it certainly has. With the US dollar rising overnight, that's what's impacted our commodity plays today. Of course, the expectation that commodities will move lower if the Fed raises. I think the whole Fed raising issue, or at least from what happened overnight, is a bit of a storm in a teacup. However, the Fed, for my mind, didn't really say anything that they haven't said before. Of course, they said that June is a live possibility, but it is dependent on data and on economic data. And until we see that data, I think it's a little bit irrational, perhaps, to be drawing, significant conclusions. So, yeah, like I said, I think the reaction overnight was a little bit overdone. I think we need to wait and see what the US economic data presents, and then, expectations will shift accordingly.
I don't know. They did mention inflation was making if inflation made some progress, and obviously other data as well, they would look at June. And certainly inflation did do a bit better this week, or heat up a little bit earlier in the week when we saw that data. But we'll have to wait and see, as you say. So we'll keep an eye on that one and how the dollar as well reacts to that. But let's talk the markets more broadly, Chris, because I know you've been talking about valuations on the Australian share market with us. You still think it looks a bit top heavy?
Yeah, look, I do think it looks a bit top heavy. My view from last week hasn't changed. You'll forgive me for repeating myself, but the market has had a strong rally. We're up at a technical resistance point, and I fail to see the catalysts that are going to drive the market higher. There was talk this morning off the back of a Macquarie note about RBA interest rates dropping to 1%, and that will probably fuel a yield play, but that's balanced against possibility that the US raises, or when they raise, it's more likely. It's just a matter of when. And of course, that'll see, as we were talking about before, the US dollar push higher and commodities come lower. So it seems like we're getting with one hand and we're giving back with the other. And all things being equal, I don't see what the catalysts are to really punch this market above 5,400. I think we're probably due a pullback. It doesn't need to be a huge one, don't get me wrong. I'm not saying we revisit 5,000 or lower, but I think 5,150 to 5,200 is a sensible place for the market to retrace into, and then hopefully the bulls can build a base of support and launch again from there.
Okay, so I mean, because obviously with interest rates looking like they will go lower, and certainly a lot of big banks are out with forecasts, CBA for one saying 1.25% is where the cash rate's headed. Yes, Macquarie saying towards 1%. If this happens, you obviously see upside in the broader market. You're just saying we'll see downside first, is that correct?
No, not necessarily. So, I mean, you have to weigh the fact that if the RBA is cutting interest rates and, of course, fueling the yield play, and the banks come again into focus, well, the banks have deteriorating fundamentals, and a lower interest rate suggests that the economy isn't performing as we would want it to, and that's going to impact on earnings. So, again, it's that double-edged sword. Yeah, okay, the RBA might cut and try to stimulate the economy and fuel growth, but it's reflective of a poor environment which these companies have to operate in, and if they can't extract the earnings that they want to, well, again, we're getting with one hand and we're giving back with the other. So, more so from a technical perspective, that we pull back and we consolidate, and this market really needs to figure out where it wants to go. It's already showing us in the last week or so that it can't punch above 5,400, try as it might. On the back of the last RBA cut, it is trying to push high, but it simply can't. So, as I said, I think the natural move from here is a bit of a pullback, a consolidation. We'll get some more clarity on what's happening in the US. We'll have some more clarity on what's going on with regard to the RBA and where rates are headed locally. And then, like I said, hopefully we get another launch from there.
All right, we'll watch that. Three of the big four banks in positive territory today. The NAB weaker by just about 2 cents. I want to ask you about JBH Hi-Fi as well. Obviously in the news today with talk that it is looking at the good guys. Of course, it's come out and said that it is looking at that one. Its stock's up 4% off the back of this. JBH Hi-Fi's had an interesting run, hasn't it? Because it's sort of had to adapt with the times. Obviously, it used to be more of a sort of music and that sort of based store. It had to obviously adapt to the times, and it has been more into appliances. So does this fit with their strategy now going forward?
Yeah, look, on hearing the news this morning about the potential acquisition of Good Guys, I must say I really love this as an idea, and I genuinely hope that they can get it done. It does seem to be a natural move. They will pick up market share. They will expand into the white goods arena. Another competitor will go offline. We've already seen Dick Smith bite the dust this year. It all depends on what the price is, though. Some mail that I got this morning is that the price is somewhere in the range of $800 million to $1 billion. Of course, JB Hi-Fi doesn't have $1 billion lying around to just go and pay cash for it. So does that raise the question of a capital raise? I'm pretty sure they could get 500 away up at the share price where it is at the moment. Or alternatively a rights issue. So yeah, in theory I like the deal. It's just whether the price is conducive and then of course how they fund it.
So, okay, in terms of how competitors might view this, could you see any competitors wanting to get their hands on it, on the good guys?
Yeah, I would think so. I mean, they've got 100 stores across Australia. They've got a really good footprint. It's a very strong brand. It's more of a discount brand, and you know, just on that point, it perhaps opens up the opportunity for JB Hi-Fi to differentiate somewhat. JB Hi-Fi becoming a bit more of a premium brand, and the discount arm being good guys. But yeah, given the quality of the brand and the footprint, I would see potentially other competitors looking at it. But the only one that really springs to mind is Harvey Norman, and they're already pretty strong in the white goods space anyway.
All right, we'll keep an eye on that one, but certainly, yeah, the stock is positive today, so it is being reacted to positively by shareholders. Want to move on to Santos before we let you go, Chris, as well, because obviously we've heard a lot about equilibrium moving back to the oil market. I know Goldman's changed their tune on oil prices, sort of turning less bearish and a little more bullish on the oil price going forward. You're still long on Santos?
Yeah, still long Santos. So, look, some supply issues have arisen. They are only transitory, but you know, the fires in Canada and the Nigerian production issues. But more than that, you know, US shale producers are realising that they cannot compete effectively with the oil prices being as low as they were, and that production has gone to the wall. So, you know, it's like trying to turn the Titanic. We probably won't get into any semblance of equilibrium until early next year. But the fact that it's happening and the fact that markets are forward-looking, well, that's already being priced into the oil price. And I think, you know, the oil market is probably discounting some of these, albeit transitory, supply-side issues. So I think oil can pop higher. I think it moves into the 5 handle somewhere in the 50s, and then we'll probably need another catalyst to push higher after that. But also on the demand side, there's some suggestions that demand is picking up around the globe, in China, in India. So it seems to be moving in the right direction for oil, and Santos being the most highly leveraged local company to stronger oil prices, that's why we're still long.
All right, Chris Conway, appreciate your time as always. Thank you.
Thank you, Ingrid.
And